The first credit card transaction was made in the 1950s by Frank McNamara, who went on to become one of the founders of Diners Club. The idea came to Frank one night after realising he'd left his wallet at home whilst dining out with clients. Luckily on that occasion, Frank's wife came to the rescue, bringing him cash to pay the bill. A year later, he returned to that same restaurant with his partner, Ralph Schneider. This time, when the bill arrived, Frank paid with a small cardboard credit card, which could be used at 27 different participating restaurants, and Diners Club was born. Fast forward to today, and globally, the amount of card transactions have soared. In the UK alone, there are over 2 billion card transactions each month, and this continues to rise. The global payments market is expected to reach nearly $4.8 trillion by 2029. The way we pay has always evolved and will continue to do so. However, increasingly, we are less reliant on the physical cards in our wallet to perform these transactions. Instead, with the widespread adoption of digital wallets, the card itself has become more of a representation, both mentally and digitally, that links a payment from an individual to a source of funding. The real evolution is now happening beneath the surface. Tokenisation, virtual cards, mobile wallets, and embedded finance are some of the developments that are leading the charge. It is those organisations that prioritise end-user experience that will lift the benchmark on what is possible and continue to drive growth. 3 key pillars that are driving this transformation in card payments UX are convenience, confidence, and control. Let's start with convenience. The speed and simplicity of digital payments has made them the lifeblood of the modern economy. Over time, we've seen giant strides in making card payments faster and easier, which has been a primary driver of customer adoption. Remember those old click-clack machines? Those were eventually replaced by electronic point-of-sale terminals enabled with a swipe and a signature. They evolved into chip and PIN, and today, contactless payments are everywhere. Whenever we walk into a shop, we all expect to tap our card, phone or wearable and walk out with our purchase. No hassle, no waiting. Almost everyone is comfortable with the process. Even my mum now doesn't think twice about taking out her card and tapping it to pay. But I believe the next set of changes will go just as far again. Embedded finance is now redefining convenience. Rather than a whole separate process, the payment experience largely disappears into the background. The most visible it becomes is a simple authentication step using a biometric within the overall purchase process. Therefore, when you book a taxi or order online shopping, you no longer even need to think about the payment anymore. It's completely embedded in the service and the experience. Looking forward, I'm excited about how we can extend this super slick process to an even greater range of scenarios that will make card payments even more ubiquitous. Innovative issuers are developing a whole range of new use cases facilitated by card-to-card capabilities. I expect to see disruption in cross-border remittances, refunds and payouts, payroll, and expense management, just to name a few. Let's look at the second pillar, confidence. Ensuring that users have confidence in every transaction is critical. However, trust in the digital world continues to be undermined by bad actors. As more payments go digital and money moves faster, the surface area for fraudsters expands. In 2022, card fraud in the UK totaled over £500 million. Whilst customers are typically protected when something goes wrong when using their card, generally speaking, the user experience still sucks. The same level of thoughtfulness that has gone into facilitating the payment in the first place is rarely evidenced in rectifying the problem. Chargeback processes remain clunky, time-consuming and uncertain, all of which contribute to creating stress for a user. Even better than a positive refund experience is preventing fraud in the first place. Whilst payments going digital has increased the opportunity for fraudsters, the data points that now surround a payment offer the best line of defence. Tokenisation is key. The best way to limit the appeal of fraud is to remove the value. Payment tokens remove sensitive data from the payment process, so even in the hands of the fraudster, they are redundant. In addition, increasingly sophisticated fraud management that proactively prevents malicious actors is key for issuers helping build consumer confidence. And thirdly, control. The future of payments isn't just about speed, it's about putting users in the driving seat of managing their own money, giving them control over each and every transaction and fitting payments around their life rather than vice versa. For example, using multiple cards can be overwhelming. Using a hybrid card lets you flip between debit and credit functions, switch between currencies, or even enable the conversion of digital assets. To design card programs with the end user in mind, we should be trying to stand in the shoes of the cardholder and understand what they are trying to achieve. Therefore, for some people, why should a card be limited to a single account? In direct contrast, for those who are comfortable, why shouldn't every payee, every merchant, or even every payment have its own virtual card, which can be disposed of once used? A one-size-fits-all approach is too limiting. Instead, flexibility is key in order to give users control of their own card experiences and ultimately their finances. When it comes to controls, the mobile apps of many banks have followed an on-off approach. For example, block my card because I can't find it, prevent international transactions, or just stop gambling. Tokenisation provides value beyond just security. The precision that it provides enables even more fine-grained controls or spending limits. This means a user can manage their impulses to stop subscriptions that they no longer want, or to limit how much they spend online shopping, on takeaways, or even just going out. So where are we headed? We've seen an incredible journey from the first mechanical card machines in the 1950s to today's tokenised, invisible payments. What's driven this evolution isn't just technology, it's about a relentless focus on the end user experience. I believe we're still towards the beginning of this new phase of card payments, and the future is incredibly exciting. For us at Paymentology, by prioritising convenience, confidence, and control, we're reshaping the future of payments. It's not about the card, it's about the experience it enables. And the future of payments is seamless, personalised, and above all, secure.